Hello everyone, and welcome to this presentation on stock strategies for both bull and bear markets. Now in today's presentation, I'm not going to only share with you some of the best strategies for trading in any market, but I'm also going to be showing you a current chart as we see right here and a tool that we have at Specialist Trading that can tell us whether we are in a bull or a bear market. As you see here, these are all the swings going back 25 years or 20 years in the markets, the S&P 500 index. And you see how every time we topped out, we had a nice bear market that lasted about 3 years. And then we've been going straight up since 2009. Are we in the beginning of a bear market since the market has gone down rather sharply the last 2 or 3 months? Well, I'll tell you exactly what this tool does and how it can explain to us whether we are in a bull or bear market. Now, today we're going to be talking about all these things that are offered within our Specialist Trading Elite Stock Trading College. This is a great package that we only have and only present to our members roughly every 2 or 3 years. And I'm super excited about this because this is the second time in which we have given this package, which is the full suite of our stock trading college, to all of our members. So welcome. This promises to be a great presentation. My name is Stephen Primo. I am the president and founder of Specialist Trading. Now, I have been trading for nearly 40 years. I started out trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. I know there aren't very many specialists left anymore because they've pretty much closed down all of the regional stock exchanges except for New York. But if you're not familiar with what a specialist did, if you ever Google some of those pictures where they had of the old trading floors with all the paper on the floor and people yelling and screaming, the specialists were those traders behind these large wooden podiums that made markets roughly in anywhere from 35 to 50 stocks. So if you wanted to purchase or sell any one of these issues, you would call your broker would call the floor trader, and then he would go up to the specialist to either buy or sell this particular equity issue. So that's what I did for roughly 9 years. I traded through actually the crash of 1987, one of the really strongest and very damaging bear markets. Even though it lasted a very short time, it was extremely powerful to the downside for those of us who hadn't seen that before since 1929. And then I traded through the bull market that followed after that. So I've been involved in environments where markets are going straight up, markets are going straight down. I've been trading through markets that are going sideways, volatile, very rangy markets, quiet markets. Therefore, with my nearly 40 years experience, I know what works in terms of consistency. I've seen and traded through it, just about everything, and I know what doesn't work. So that's the beauty of all the courses and all the teaching and different packages we have at Specialist Trading, because what we do is we teach and mentor all of our students the things that I've accumulated in my nearly 40 years of trading, so that we can put you on that road to consistency. We feel, with upwards of 80% of traders failing, what they really need is good, solid, fundamental education, things that have stood the test of time, so that you can ultimately make your own decisions, not have to rely on anything other than your own trading decisions. So this is what we do. We don't really want to tell you what to trade, how to trade, or what market to trade. We just want to give you the information so that you can ultimately decide. That's why I say we are first and foremost an educational company. Now today I'm going to be sharing with you a lot of the different methods and techniques that are involved in our stock college. But before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these strategies, as well as different tips and techniques and methods that are included in the course. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you that. And as you're taking a brief moment to view our disclaimer, I would also like to, if you haven't started following us already, I would like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. That's our abbreviation for Specialist Trading. That is at SPLST_TRADG. And I post a lot of great free information on a daily basis, anywhere from daily financial wisdom to actual signals that our strategies have generated. Now, if you go onto our Twitter page, you'll notice that just yesterday, I tweeted that we had multiple strategies generating sell signals in all of the major market indices. And if you notice this morning, the markets went down rather sharply. You could have, if you were just trading even the futures, you could have taken a quick 10 to 20 points right off the bat in the first hour of trading today. That's $1,000 roughly per contract if you wanted to. Or other instruments, you could have been trading options. There's lots of different ways, but you see how powerful these signals are. So feel free to follow us on Twitter. Even though I don't tell you our entry points and exactly where we would be getting in and exiting, you can follow us after the fact. Now, if you want more detailed information about what we do or what a little bit more about myself, well, I've teamed up with Pro Trader Strategies. They promote all of my courses and techniques, and they've put together a Facebook page. So simply go to Facebook, log on with ProTraderStrategies.com, and there's a lot more detailed information, a lot of videos, educational videos, as well as information about myself to learn more about what we do at Specialist Trading. Okay, now I want to start by sharing with you what I learned trading on the floor of the exchange. And this is really giving you a little bit of insight about the philosophy and how I actually started. Not very different from a lot of people. But before I go into detail about that, I just want to state that this promises to be a great educational presentation. I'm going to be talking about what's going to be offered in our stock college. So if you have any questions, please wait till the very end of today's class. The presentation seems to flow a lot better if we wait till the end to ask questions. The only question I will answer at this time is this is being recorded. I know a lot of people have to leave early or they have technical difficulties. So if you're having any difficulties, you can request a link to this recording from Pro Trader Strategies, okay? So there's lots of ways to get the link, and just kindly hold off to the end of today's presentation to ask any questions. Okay, so why don't we begin? Once again, let's start up with what I learned trading on the floor of the exchange, because I've made no secret about it, and contrary to what a lot of people believe, even though I was on the floor, my first year or two trading, I struggled tremendously. In fact, I was probably in the same boat as a lot of you. Not so much that every trade is a loser, but you have these series of winning trades that give you this false sense of security, and you think you're on the right track, and then it's followed by one or two terrible trades where you give everything back. I'm sure that sounds familiar to a lot of traders. This is the way my trading was for the first year or two that I was beginning to trade on the floor. And it was extremely discouraging and frustrating because I was putting a lot of hard work in. I was reading all the books, going to all the seminars, doing everything with conventional wisdom that I had been taught to do that was supposed to work. But I really wasn't seeing any valid results. There was no consistency in my trading. So here's what my mentors taught me. They said, Steve, in order to achieve successful trading, it should be non-subjective. All right, so what does this mean? It means that there shouldn't be a lot of room for interpretation. In other words, when you look at a chart, when two traders look at a chart, they should come up with the same scenario, the same synopsis of what's going to be happening. Someone shouldn't look at a chart and say, well, there is the support, okay, according to my tools and what I've been taught and the software I have, that's valid support. Where another trader would say, no, that's resistance. According to what I look at and what I've been taught, that's actually resistance. And that's the way a lot of traders trade. Two people look at the same chart or they listen to the news and say, oh, that was very bullish. That's extremely bullish. I think we should be buying the market. Someone else would say, no, that's terrible for this particular sector. You should be selling, okay? It's too subjective. Trading should be non-subjective. There shouldn't be a lot of room for interpretation. It should be cut and dry in order to be successful. All right? Secondly, they said it should be consistent. Now, obviously, everyone wants to be consistent, but it's extremely important that you understand what we mean, because consistent does not mean that every trade is going to be a winner. Okay? Just imagine, look at any athlete, look at any performer. Not everything is a success. Not every baseball player hits a home run or even has a single at every time at bat. A lot of times they'll strike out. Same thing with basketball players. They don't make every shot. Same thing with actors. A lot of times they'll have a string of great movies and then they'll have a real clunker every once in a while. It's perfectly normal. But what consistent means is, instead of being the way I used to trade, which was one step forward, two steps back, now we want the process to be the opposite. We want it to be two steps forward, one step back. So even though from time to time we may have some small minor losses, we feel confident in our approach because we know we'll be able to be resilient and make it back quickly. Okay, so that's what consistency is. I would run away from any webinar or any educator on TV or on the internet that tells you, oh, you can generate thousands of percent per quarter or per year. All right. It's just trading is not like that. I still trade, and I had a small loss yesterday. I made it all back today with the market going down. That's just the way it is. So that's what you're looking for. Secondly, or thirdly, I should say, trading should be as simple as possible. Now look at this. This is what my mentors taught me about this. But when I first started trading, my trading plan was tremendously overcomplicated. I had maybe 10 indicators on my screen. In fact, I just didn't have one screen. I had about 4 screens in front of me. Okay, I was listening to all the news events, every earnings report, every sector from the tech sector to the hospitals to find out what they were doing, how they were going to relate to the market. I was listening to every trading guru. We didn't have trading rooms or chat rooms then, but what we had were newsletters. So I subscribed to all of them. And as I stated, I couldn't make a dime. None of this was helping me. And my mentors showed me the reason why was because it was too complicated, and they said something that was extremely important. They said, Steve, it is the easiest thing in the world for someone to overcomplicate their trading. Anyone can do that. It doesn't matter if you've been trading 30 years or 30 minutes. You can pile on tons of stuff onto your trading, and for some reason we think that makes it more valid. But what they taught me is that the simpler your trading plan is, the less rules and the more common way in which to approach the markets is actually the more valid way. So keep things as simple as possible. If you look at traders that have been trading for a relatively short time, this is anywhere from 5 to 7, 8 years, most of their trading plans are extremely complicated. All these convoluted indicators, different logic that you should be watching, extremely overcomplicated as well as subjective. There's different ways in which to interpret it. If you look at traders that have been trading like me 30, 40, 50 years down the road, our trading plans usually have no more than 4 or 5 rules using very simple indicators you can find just about in any charting software package. Okay, so keep your trading simple. Don't listen to all this outside information, outside news, outside chat rooms, trading rooms, what people are saying. Just look at the chart in front of you. And then lastly, and I think most importantly, what my mentors taught me was they said, Steve, you should be a part of the process. I think as traders, what we want to do, myself included, this is the way I first started trading, is we want someone to give them the magic key and just tell me what to do. Tell me what the best time frame is. I get this on a daily basis. Steve, what time frame should I trade? Steve, what's the best market? Steve, what do you think is going to happen in this market? All right. Every time you ask a question from someone or something else to tell you what to do or how you should trade, you're basically telling the market, I don't know how to trade. I don't know what to do. And that's a terrible message to be sending out. Can you imagine a doctor saying that to someone else? What do you think I should do here? Okay, what do you think I should operate on, or what do you think the method should be for my diagnosis? Or what if a lawyer said that? What should I do here? How should I apply this law? Okay, basically saying I don't know. You wouldn't have much trust in that. So why would you trust yourself to ask someone or something else what to do? What's the perfect time frame? What do you think of this market? Do you think this market's going to carry over? Do you think this is going to happen? I never ask those questions. All I do is look at the market and only ask one thing, and that's the market. I ask the market, what are you going to do today? And through our tools and my mentoring, the market tells us probably about 90% of the time what it wants to do. Our only job is just to jump on board. Okay? The market, through our simple tools yesterday, told us it's going to go lower. That's what it told us by the simple way in which we look through a simple process, and nothing complicated, no, once again, convoluted logic or no high-tech indicators, but just by looking at patterns. The market told us it wanted to go lower, and so the market all of a sudden was down 300 or 400 points since we got that signal yesterday. So listen to the most important thing, which is the market. That way you will become a part of the process. Do not, I repeat, we teach, our philosophy is to not rely on what others think. We tell our students, never ask someone what you think the market's going to do, because basically you're telling the market, I have no idea what to do. That's not a way to be in any business or any venture. Okay, so as we stated, my goal is to teach you. We are not anything other than an educational company. You see, as we state here, my goal is to teach you how to trade with a specialist edge. My goal is not to trade for you. My goal is not to simply go out there and force feed you signals and tell you what to buy and what to sell. My goal is to teach you so that you can become a part of the process and you will make your own trading decisions. In my nearly 40 years, I found out through talking to thousands of traders that virtually is the only way to become consistent, by being in charge of your own trading. Okay, so this is what we teach. This is our philosophy, and just wanted to get that through to you before we go into further detail about what we're going to be teaching you today. Okay. All right, so let's talk about what's offered in the course. Let's start with some tools and techniques that we're going to be offering you. Extremely simple, but let me show you how powerful these are. Edge number one is a simple tool designed to place you on the right side of the market in any time frame and in any direction. Okay, so as we look at this example here, an older example in UPS, as we see the market was going straight up. All right, at this point, people would say, boy, I think we're going straight up. We should probably be shorting this, or what should we be doing? Maybe we should be buying it. I don't know. What are the earnings on this? Remember, the market tells you everything you need to know. We just have to listen to it. Instead of relying on what we've been taught, conventional wisdom tells us to listen to other things. So with this simple tool, usually someone would see something like this happen and say, okay, I knew it. We're rolling over. That's my sign to get in and go short. Because we're rolling over, we're probably going to come all the way back down here. Let's say some news came out, maybe the earnings, and they were, figured to be lousy, so the stock fell out of bed here. So you want to jump on board. So let's say you sold on the opening here, and you're all excited. You've got a profit at the end of the day. So you sell, okay, and then look what happens. Market goes straight up. In fact, it makes new highs. Well, this simple tool I'm going to be teaching you in the course would have had you actually looking to buy as opposed to sell. You would not even consider going short this stock. And in the same reference, looking at this chart of OI here, someone would say the same thing, like, well, Steve, we've been coming down. It looks like we've hit some support here. Look at volume, and volume seems to be picking up on the upside, okay? I've always been taught in this webinar I went to that positive volume means the buyers are coming in. The institutions, after all, the institutions run the market, okay? And on a short-term basis, we seem to have some nice support here. As well, we had a nice doji here. I follow candlesticks, and even though this isn't a candlestick chart, this is a doji, okay? And we've broken some short-term downside resistance here with this downward trend. So this is all pointing to the things I've been taught, that we are going higher, okay? So you decide to jump in and buy, and lo and behold, look what happens, okay? With this simple tool I'm going to be sharing with you, you would never have been looking to buy. All you would have been looking for was selling opportunities. This is why most traders fail, in my opinion, because they're buying when they should be selling and vice versa. Here's the second edge I'm going to be sharing with you today. This is a simple technique designed to fine-tune your entry, because many times you actually will not be wrong on a trade. Perhaps your trade says for you to buy, and you purchase. The only trouble is it doesn't happen right away. So you scare yourself, you get out of the trade, you stop yourself out, and then the minute you get out, it goes right back up, right? I'm sure you've all experienced that before. Extremely discouraging, because it's like the stock or whatever market you're trading was waiting for you to get out, and the minute you get out, it goes in your direction. Well, this simple fine-tuning technique for entries will get you in at high probability entries, so most of the time, once you get in, you won't have to scare yourself. It'll continue going in that direction, or very soon it will go in that direction. So as we look at this example in Tiffany right here, okay, someone looking at this would say, well, Steve, my analysis says that this should be a buy because we have some type of resistance here, and if we close above there, I want to buy. This is a really nice pattern that works for me often, so I want to buy here. Okay, so let's say that it does break out, and that's where you jump in and buy. Okay, and then look what happens. The stock goes straight down. So you stop yourself out. You're upset. You go, boy, you know, this always happens to me. The minute I buy, it goes the opposite direction. Well, as I stated, oftentimes you are really correct in what you should have been doing. You should be buying this stock, but your entry was faulty. So you shouldn't have entered here. We have a technique that would actually have you entering the stock based off your buy signal, but you would be buying down here. So rather than buying here, sitting through all this downside action, probably stopping yourself out and then cursing and screaming, it would still have you looking at a buy setup, but you would purchase down here, and look what would happen after that. So it's a way to fine tune your entry so you don't have to sit through a lot of the downside clutter when you're long and a lot of the upside clutter when you're short. We're also going to be talking about exits. Everyone says like, okay, Steve, I don't have any problem with entries or with, how to, trade stocks. It's always, I have trouble getting out. Many times I will sit there and I will, get a small exit and then the thing just keeps going higher and higher. Or the opposite. Many times I'll look for the long, big move. And then the next thing I know, I missed it. I'm back to breaking even. And then the next thing I know, I'm actually holding a loss. So we teach you ways in which to, deal with all of these scenarios. Let's talk about exits. Here was an actual signal in the IWM. This was an ETF for the Russell Index. This was an actual signal that we will be teaching in the course that would have had you buying here. And if you took one of our generic exits, you would have been exiting right here. Nice little gain in one day, right? And if you wanted to get and squeeze a little bit more out of the trade, you would have been exiting at exit level number 2. And then even more, you would have been exiting at exit level number 3 if you wanted to squeeze the most you could out of this trade. So what a lot of our students do is they will trade multiple lots. Let's say you traded 300 shares, exit 100 here, exit another couple of hundred here, and then exit possibly the last one here. Or different ways. Let's say you could exit here. And then, once you got to exit point 2, move your stop to unchanged and then exit your final portion at exit level 3. Lots of different ways to do it, but you see that the simple technique that we will share with you will work with any strategy. It works great with our strategies. And so you can actually have more results and better results using all 3 of these if you'd like. The main thing is we always suggest to our traders to apply these, but once you get to exit level number 3, you should be exiting because usually that's the end of the run. It can work on the downside as well. This is another one of our signals. This is, I believe, strategy number 4. Now, you could have gone short Caterpillar Tractor using exit level number 1 and number 2. You could have exited here or exit level number 3. But as we stated, this technique is so fine-tuned for your exits that oftentimes when you get to exit level number 3, it's best to be out of your position altogether because the trend usually changes, okay? Now that's just one technique we share with you. We have more techniques on which to use for exiting. In fact, ways in which to place your stops as well. A lot of people are always concerned with, well, I know the standard basic generic points for stops, but how about other places? What about if I want to trade conservatively? What if I want to trade aggressively? What if I'm willing to take on more risk? What if I'm a type of trader that doesn't want to take any risk at all? Well, we share with you tons of different ways in which to apply your stop. We have 4 initial stop placements for the strategies we're going to be sharing with you. We also have 3 moving stop placements so that if you want to track the trade, and not use these exit levels that we share with you, but just track it and let the market stop you out. We show you ways in which to use and apply a moving stop. Now, let's go into the strategies because I know this is where most of you are concerned. You're saying, okay, Steve, those are all great, but I want to see the meat and potatoes. How do we actually trade these things, okay? Or we're going to be sharing with you 2 of our best strategies in terms of consistency. These are the most popular, and these do extremely well with stock. So we're going to be offering you the first strategy, which is strategy number 4. I'm sure a lot of you have heard me speak about it before on webinars, or we just are talking about strategy number 4 by itself. But this is all included in the course with all these other techniques and tips. And strategy number 4 is a great strategy. I trade it just about every day in some form or fashion on a daily basis with my own personal trading. Okay? The thing that's great about strategy number 4 is that it's so resilient, meaning that when it does have a small loss, many times you will get another trade and make everything back rather quickly. As well, with strategy number 4, it's one of our best strategies for transferring on to any market or any time frame. So it just doesn't have to be stocks if you don't want it to be. Let's look at this older example in PSA coming into the end of the year here. Obviously, we're in an uptrend, okay? And so the way to find that out is basically through the techniques we teach you. But once we're in an uptrend, we're never going to be shorting. We're only going to be buying. And so here are all the buy setups that were generated with this stock, starting in September, coming all the way into December of this past year. Excuse me. Now I realize this is an expensive stock. But, it does not mean that you would have to purchase the actual stock. You get to purchase directional options each and every time. On the first setup, you would have had a nice gain of roughly 24, nearly 25 points. On the second buy, which is in November, this one generated 16.5 points. And the last one, nearly 11 points. So if obviously a $250 stock is expensive, but you don't in any way have to purchase that, you could have easily just bought directional calls on this. Now, this strategy also works to the downside. This is one in December in MANH to the downside. Now, obviously, we see here that we're in a strong downward trend. Since we're only going lower, we are never going to try and pick a bottom. If you had tried to pick a bottom or go long in this stock, you would have lost a lot of money. So strategy number 4 only generates sell signals. And as we can see here, in mid-December, a sell signal was generated, and that generated a quick 4 points. But then another one was generated at the very end of the year, and that was a quick 14 points coming into the middle of January just a month ago. All right, so you see how it works in any market and in any time frame, and we can also apply this to ETFs. This is the same strategy. The rules don't change because we trade an ETF or because we trade a stock. Everything stays the same. Now, as we see here, we had a sell signal generated in the middle of December, December 17th. Now, a lot of people were really caught off guard with the strong sell-off we had coming into the beginning of the year. All right, in January, a lot of people were really caught off guard and couldn't believe how strong the decline was. Well, strategy number 4 was generating sell signals in the S&P index ETF, which are the spiders that represent the S&P 500 in mid-December. So you would have known right off the bat, if you just wanted to use this as a directional tool for the market, that the market basically, the S&P 500 is telling you that it's going lower. Now you could have sold this on the 17th, taken a quick profit if you wanted to, or remained in the trade and stayed in much longer for the full 20 points. All right, so that's strategy number 4, the way it works. You see how resilient it is, but we also want to share with you strategy number 8. This is, in my opinion, one of the most overlooked strategies and underrated ones we have. It was specifically designed just for trading stocks. It will still trade other markets, but it works the best in the stock market. So let me show you how this works. Many times you will see markets like this, FSLR, okay? And it looks like, well, boy, it's a tough market here. We're going up, back down, backing and filling. Well, once you apply the rules to strategy number 8, which is very simple, and we teach you all of these, you'll see here how we bought at the end of October for a quick 8.5 points, another buy at the end of November for a quick 7, and then in the middle of December, once again, when the S&P 500 index was giving a sell signal, well, guess what? This was generating a buy signal. The way we teach our students is, remember, you can trade any way you'd like to. Now, if you see that the indices are generating sell signals, well, then you can only apply your individual stock trading on that side to sell. But it doesn't mean you have to, because even though the indices may be generating a sell signal, we tell our students that just look at the chart you're trading. As you see here, FSLR was generating a buy signal at the very same time the spiders were telling us to go short. And one of the best things about strategy number 8 is that many times when you think a market has run out of gas and it's gone up too high or gone down too far, strategy number 8 will generate even more signals because it senses the momentum, that there's still momentum left in that direction. As we look at AKAM here, this was in November of this past year, we had a very strong gap to the downside, probably based off some news or something that happened. We really don't care. We don't follow any news events or anything of that nature at Specialist Trading. Remember, we only want to listen to the chart in front of us. We don't listen to outside sources because over time, these things will actually keep us further away from being consistent. Remember, we want to keep things as non-discretionary and non-subjective as possible, and news has a way of making you doubt yourself. So we don't want to be interested in that. We only listen to what the market's telling us. So at this point right here, a lot of people were saying, well, boy, that is too strong of a gap not to bounce. And it looks like we have some support here. We opened lower and then closed towards the high. So this is telling me I should probably be buying AKAM, all right? Well, not according to strategy number 8, because strategy number 8, through its rules and requirements, saw that there was more momentum to the downside. And look at 2 days later, a sell signal was generated at the end of October to go short. This could have generated another nearly 10 points, and then 2 more sell signals generated at the end of the year, going down for another 9 points. Okay, just when you think there's no way it can continue going further. Strategy number 8 will oftentimes squeeze more profits, either up or to the downside. Now we can also apply these to intraday trading. A lot of you are probably saying, well, Steve, I don't trade daily bars or even position trading. I just trade in and out during the day. That's fine. These strategies will work on daily bars, on weekly bars, monthly bars, and on 5-minute bars or tick charts. It doesn't matter. You'll still get the same setups. You don't have to change anything. The same rules apply, remember, regardless of what market, regardless of what time frame. Here was a 5-minute chart of the QQQs, the ETF for the NASDAQ index. This was just a month ago in January. As you can see on this 5-minute chart, here was a sell signal generated, and then another was generated before the market went even lower. Okay, so both of our strategies can be applied to any time frame. So don't worry if you're an intraday trader. A lot of traders will say, well, Steve, I only trade tick charts. So do I. I trade tick charts as well. These strategies work just as well on them. Now, here I think is one of the best things we're offering in the course. This is our roadmap for any market, any direction, and any time frame. It's not a strategy. It's not a systematic tool. What it is a roadmap. It's a directional tool. It's one of our most popular methods we have at specialist trading, and that's the PET-D. Okay? The PET-D stands for the Primo Early Trend Detector. Now, even though it's the Primo Early Trend Detector, it's titled that, I learned about this almost 40 years ago on the floor. This is a simple formula that you had to come up with. And so we used to, calculate this formula on a daily basis. Because at the time, we're talking about 40 years ago, there were no high-speed computers or internet access or computer programmers. So we couldn't have this formatted to be updating with each tick or with each 5-minute bar. But now, with the advent of high-speed computers and programmers, we've been able to devise it and have it do such so that we've changed it into a color bar algorithm. So it's a proprietary color bar algorithm, and all it does is it changes the colors of the bar to either green, meaning you're in an uptrend, or red, meaning you're in a downtrend. And that's it. So there's nothing you really have to look at in terms of finding out, well, which direction are we going? You could just rely on the PET-D if you want. If you have a series of green bars, you're in an uptrend. Regardless of what the news says, regardless of what some guy says on a chat room, you're in an uptrend. Just listen to what the market is telling you and not what anyone else is telling you. If you have a series of red bars, as we see here, you're in a downtrend, okay? Forget about what you've been heard or told. It really is the best tool. I have been using this nearly every day since I figured out how to apply the formula. This is how powerful the PET-D is. And as you see here in this older chart of AA, the beauty of the PET-D is that it tells you which direction you should be trading. Now, once you know the direction, you can apply any strategy to that direction. So someone looking at this in hindsight will say, well, Steve, yeah, it's easy to see that we've been in an uptrend. Well, sure, it is easy now, but how would you have liked to know back here that you were in an uptrend? Well, the PET-D already knew, way back here because the bars were green. So see, that's the difference. When you look back in hindsight, you look at the entire picture and say, oh yeah, well sure, we're in an uptrend. But what if you could know well back here in advance that you're in an uptrend? You could apply one of our techniques, one of our strategies, or any one of your techniques or strategies to it. Same thing with the downside, this older chart of WIN, okay? Sure, someone looking at this would say, well, yeah, Steve, well, how hard is it to know that we're in a downtrend here? I could have told you that as well. But could you have known we were in a very solid downtrend way back here when the stock was trading at 205, 210? Well, the PET-D did. The PET-D was already coloring the bars red well before it dropped out, well before this gap down, well before it lost a good percentage of its value. As we see here in this chart, here's how well the PET-D can work. I'm not going to promise you that it works this perfect every time, but I see this over and over again, regardless if we're looking at intraday charts, daily bars, or monthly bars, okay? Here's a chart in HRB. As we see here that we were in a nice uptrend, and let's say you had decided here that, well, it's time to go long. We look like we've broken out, and then nothing really happens, and then it falls out of bed and you lose all your money, okay? Well, we would have known where to get in with the PET-D. We would not have waited back here. We could have looked for signs to enter well back here before the trend started to dissipate, and we could have exited, and if we were so inclined, we could have gone short once the bars turned red. This is why we call it the early trend detector. Most of the trend detectors you have, anywhere from indicators to moving averages, most of those are lagging tools. And the PET-D can at times lag a little bit as well, but in my nearly 40 years of trading, I have not found a better tool that fine-tunes and tells me many times in advance what the trend is going to be. As I stated earlier, it would not matter if this were a 5-minute chart or a monthly bar chart. It works the same in all time frames, in all directions. Now let me show you, for example, how this works long term. Remember I shared with you that chart in the very beginning of today's presentation. That was a monthly chart of the S&P 500 index going back roughly about 20 years. Here's the chart we viewed at earlier. Now, as we see here, this is where the market topped out, the dot-com crash in 2000, and then we had the nice bear market for the next 2 or 3 years. Then we started to rally back up again, recoup all our losses, and in 2007, 2008, the banking and financial crisis hit, and that's where we had the next crash. Now in 2010, we firmed up again, and we've been going up ever since. But right here, we've topped out at the end of 2015, and the last couple of months, we've come down lower. How do we know that we're in the beginning of a bear market, or if we are just having a pullback and we're going to resume and go back to make higher highs? Okay, well, we can find this out with the PET-D. The PET-D, once again, just doesn't have to be applied to daily bars. We can apply it to monthly bars for long-term trading, for all you long-term portfolio traders or all of you people that like to invest in your IRA accounts, okay? All you have to do is apply the PET-D. And when you're looking for, what you're looking for is a series of green bars to tell you that you're in an uptrend. And the way we usually apply it to long-term is that when you see 3 consecutive bars of a different color, that tells you the trend has changed. So as you see right here in 2000, or I should say 1998, we had 2 red bars. But remember, we're looking for a total of 3, and we only had another green bar. So we continue to go higher. But at this point, we had 3 red bars. So that was telling us to get out in 2000, well before the real strong portion of this decline began. Now, once you had 3 green bars again, that was your signal to get back in for your long-term investing. And even though we had a splash of red bars every once in a while, we didn't get 3 consecutive red bars until 2007. We could have missed this entire debacle right here for the next 2 years, the crisis of 2008. Remember, we're looking for consecutive red bars. Now, in 2009, we firmed up again with consecutive green bars. There have been a couple of red bars ever since that, and we've continued to go higher. Now, I covered up on purpose the last couple of bars because that's giving us a clue as to which direction we're going. I'm sorry, but only if you're a member of our PET-D course and the Stock College do you have access to that information. So you will know if we are in a bear market or a bull market. Wouldn't you have liked to have known back here in 2007 to get out of your long-term investments because this was going to be falling? And the same thing in 2000 with the dot-com crash, okay? How do we know we're not there right now? We've had a really tough last couple of 2 or 3 months. Are there all the bars red? Well, in order to find that out, you can become a member of the PET-D course, which is included in our Stock College. All of these things, the strategies, all of the techniques and tips I've accumulated in 40 years, as well as the PET-D, is included. Now, we also have techniques for trading with the PET-D. These are not strategies, they're not systems, but different things to look for when you're trading with the PET-D, because the PET-D can also be used to verify or confirm signals. Now, as you see here, these are 4 buy signals that were generated using strategy number 4. Okay, this is an older chart in the Dow Jones Industrial Average. Now, the way you want to use it is that you will give your signals a higher level of consistency if they are in sync with the PET-D. So in other words, if you get a sell signal, that bar that the sell signal is generated on should be colored red. Conversely, if you get a buy signal the way we see here, the buy signal should be colored green. That will give you that consistency and that confidence to take the trade. As we see here, the very first 3 buy signals were all colored green, and you can see that the market went up strongly after that. Now, this last signal was a buy signal and met all the rules, but was it colored green by the PET-D? No, the PET-D was telling us that we are still in a short-term downtrend. So this is your sign not to take the trade. All right, so we wouldn't have gone long, or we wouldn't have used this as a market directional tool telling us that the market's going to go higher, and look what happened. You see, this is how powerful the PET D is. Now you can apply it to the strategies we will be teaching you, strategy number 4 and strategy number 8, to give you that added level of consistency. And you can also apply it to any strategy that you're currently trading that you feel comfortable with. The PET D will give you that added level of confidence to take the trade. Now, these strategies, techniques, and tips, they work the best with stocks, okay? But it doesn't stop there. You can also apply them to ETFs the way I've shown you. You can also apply them to futures, the Forex markets, and commodities. So don't think that, well, Steve, I only trade stocks every once in a while. I'm really a Forex trader. I'm really a commodity trader. These same strategies, these same techniques, the PET D, everything can be applied to those markets as well. And there's nothing you have to change. They're the same techniques, the same requirements. In fact, let me show you some charts here. Here's the Canadian dollar on a daily basis going into the beginning of the year, the first couple of weeks of January. Obviously, we've been in an uptrend. Now, if we apply strategy number 4, well, we had 3 tremendous buy signals in the Canadian dollar. One in November, another one at the end of November, and then lastly, another one at the end of the year. Okay? So there's no difference. You could have easily applied these to currency pairs. As well, we look at crude oil here. Here's a chart of crude oil coming into the second week of January, just a month ago. Everyone has been saying, boy, crude oil is going lower and lower. How do we know it's going to continue going so low? I keep trying to buy it, hoping for a bottom, you know, based off of all my mentors, all the things I follow, and I keep losing money. Remember, at specialist trading, we only trade in sync with the trend. If the market is telling us it wants to go lower, then we're sellers. If the market is telling us it wants to go higher, we're buyers. We don't listen to guys on TV. We don't listen to guys in chat rooms or trading rooms. We only listen to the chart in front of us. Now, in this chart in front of us, obviously in hindsight, it's telling us it was going lower. But wouldn't you have liked to have known that well before it reached these lows? The beginning of November, a strategy number 4 sell signal was generated to go short crude oil. Another one was generated at the end of November, and still another one was generated just roughly about a month ago to go short in January. Okay, these were all signals that you could have taken advantage of using strategy number 4, which is the same strategy you can apply to stocks, futures, commodities, currency pairs. Absolutely doesn't make any difference. Now, we're not stopping there. We're still giving you more things in the course. As if you haven't had enough of what we're offering, we're going to add 2 extra bonuses. We know that a lot of people like to trade options. So we're going to devote an entire week to showing you how you can apply options to this. Because, you know, some people, they love our strategies, but they say, Steve, I like to trade options. Do I have to purchase a stock? No, we'll show you ways in which to apply options to them. Secondly, the extra bonus we're offering is something that we only have in our college courses. Okay, we do not offer this on the side as a side course. This is something so powerful that we only add it as part of the course, and this is the ATM. And what the ATM is, it stands for Advanced Trade Management. This is something, once again, I was introduced to on the floor over 30 years ago, where I was trading, and it's a great technique, a very simple formula, but extremely powerful. And what it does is basically keep you out of unfavorable market conditions. This is advanced trade management, so you know when to trade and when not to trade. Let me show you an example here. This is an actual market. These are all actual signals generated by one of our strategies. And as you can see, every one was profitable. This is what we look for. We all want ideal scenarios like this. When we get a sell signal, it goes straight down. The minute we get a buy signal, it goes straight up. That's what we look for, okay? But oftentimes, when the market environment changes, when conditions change, our strategy doesn't mean it's faulty anymore. It just means it's out of sync with the current market conditions. And then this will result. The same strategy that generated nothing but great profitable trades will now generate nothing but losses, okay? What the ATM does is say, listen, your strategy is not basically a bad strategy. It's just currently out of sync with the market. With this simple formula that we teach you, and that once again is only offered in the college courses, we teach you how to stay out of these market conditions. And this is a great money management technique. You'll save yourself out of a lot of deep drawdowns that many of us get into from time to time. All right, so here's the curriculum that we're going to be offering in this stock college course. Week one, we're going to go over the foundation and the building blocks of stock trading. We're basically going to cover our philosophy again of what we means to trade stocks. I touched briefly on it a little bit in the beginning of this segment. And remember, it's basically ground in simplicity and not listening to outside sources, learning how to listen to the market. And that's what we teach you in this course, and especially in week one. We teach you how to listen to the market. And I know that may sound kind of esoteric and kind of vague, but it's extremely simple. Remember, our basis for anything is to keep things as simple as possible. So don't worry about it, or you're going to have to be looking at some tremendous indicators or read all these texts on tape reading or things of that nature. It has nothing to do with that, okay? Now, that's week number one. Week number two, we're going to go right into trading with strategy number 4. We'll go over all the complete rules, all the different ways for entry, for exit, for stop placement, and all the ways in which you can apply it. Then we'll go the next week into our next strategy, strategy number 8. Once again, all the rules, all the requirements, different stop placement, ways in which to extend your gains, ways in which to get in and out quickly. Every rule, you'll know how to trade this in just going over the course. Week number 4, we apply the PET D. This is the great tool that, once again, changes your color bars from either green to red. Automatically, you will know what the trend is, the short-term trend, and it will automatically verify and validate each and every signal you get. You'll also know by now that you have the PET D whether we're in a bull market or a bear market for long-term conditions. Week 5, we'll devote solely to option trading. We'll go over any questions you may have on the strategies and show you how to apply options with them. And then finally, in week 6, we'll go over ATM, Advanced Trade Management. This is the formula that you have to figure out on a daily basis every time the market changes, and we'll show you exactly what to look for, what to plot, and you'll know whether you should be trading in that market or not. And we'll put it all together with any questions and answers. So this is 6 weeks of live trading classes and courses with me. Just the same way you're seeing this online right now, we will be presenting the courses the same way online, and it will just be small classes so that you'll be able to converse with me and be able to have any question you want answered, just through a very intimate setting with student and teacher. Now, here's some testimonials we had from our last course. We had tons of people that were just amazed at these signals, and people from all over the world, from the United States to Australia to Europe. And I just want to read one of the testimonials that so many people, have seen before, but it really it hits home because this was written by a hedge fund trader. I spoke about this last time, and this was a hedge fund trader who's been trading for years. But what he wrote was really extremely encouraging because everyone can still learn. And what he said was, Primo's mentoring has been a cornerstone of my career over the last 25 years. As I type this note, 26 of the 40 positions in our portfolio are from a swing strategy of Primo's that I specialize in. Primo's greatest gift was separating me from my emotions and teaching me how to listen to the market. So this is what we really focus on. Remember, even though we give you the tools and techniques, we want you to ultimately listen to the market to take all your cues from. We don't believe in listening to anyone else, myself included. A lot of students of mine, the first time they come into class, they say, well, Steve, tell me what time frame I should trade. And I say, that's up to you to decide. I will work with you to show you the different time frames and what they offer, but I can't decide for you. You have to decide. Or they'll say, tell me what market to trade. That is your decision. You have to decide. It's like, if you wanted to learn how to play golf, I can show you how to play golf, but I can't play for you. You ultimately have to go and do it yourself. So that's what the same concept, the same philosophy we have at Specialist Trading and our Stock College course. So as we recap here before we go into questions and answers, remember and ask yourself this if you're following these guidelines. In order to be a successful trader, your trading should be non-subjective. Ask yourself that. Is your trading subjective? Do you, try to interpret everything that, every scenario you have? Do you listen to news and try and interpret if that's positive or negative? Do you wonder if one sector is going to outperform another and that's going to lead or follow the market, or if it's going to decline, make the market go into decline? Do you try and interpret everything? Do you ask people what they think of the market? Do you ask people for guidance? Secondly, is your trading consistent? Sure, do you have a number of winners, but then do you give it all back the way I did when I first started trading? Thirdly, is your trading simple or is it complicated? Do you have to have a number of requirements met in order just to have a trade set up? Okay? Is it simple where that you could basically teach anyone how to do it in just a matter of minutes, or is it something that you need years and years of experience in order to follow? And then lastly, are you a part of the process? Okay? Are you a part of the decision making? Do you sit there and say, well, I just trade a system, Steve. This thing tells me what to buy or sell. I have no idea what it's based on, but I just follow the rules. Okay? Well, that is the opposite of being in the game. You basically have taken yourself out of the game, and you are in no way a part of the process. That's why we only teach and trade strategies, because strategies allow you to be a part of the process. We do not teach or trade systems, because systems basically, by their very nature, take you out of the game. Basically, you have no say. Everything is just already systematized. You just basically push a button whenever a buy or sell signal is generated. And we don't believe in that. We once again believe you should be a part of the process. You should be a part of the decision-making process, whether you want to make that trade or not. So let's recap what you get in this course, which is going to be starting very, very soon. We're just trying to formulate all the different time zones. We have people already from all around the world who are interested and have already signed up for the course. We just have to make it, defined so that we can do it live, that will meet everyone's needs. Remember, it's 6 weeks of live trading tools and techniques. We're going to give you 2 proprietary stock strategies. We're also throwing in the PET-D, that's a color bar algorithm. You'll be able to apply that onto your charts. We're also giving you nightly educational signal service. We didn't talk about that, but once you understand the strategy and we see that you've really understood the process, we'll supply you with educational signals as they are generated. But these are only for educational tools so that you'll ultimately know what to look for. Remember, we go over conservative and aggressive versions of all of our techniques. As a special bonus, we'll throw in and devote a class to option trading as well as ATM, advanced trading management. And then lastly, I think most importantly, you are getting 39 years of trading experience as your mentor. I'm your personal mentor, and once you become a student of mine, it's not just for the 6 weeks and then we throw you to the market and hope you do well. You're a student of mine for life. So you'll have lifetime correspondence with me. You can email me, ask me anytime you like, whether it's in the following month or the following years. Ask me anything you like, and I will answer it as soon as possible and get back to you. So I can clarify any doubts you may have about certain conditions or certain things you may have learned. So here's what we're offering today. This is our elite stock trading course. This is all the information you see. Remember, lifetime correspondence, and the beauty of it is you get instant access to this course. Even though we're giving you live classes, you will get instant access to all the information in the first week of the course. Now, as I stated earlier, we didn't really touch on much about getting these educational signals, but let me show you what that would be, because after we see that you've gotten enough information under your belt and you're starting to understand through your correspondence with me what we're trying to teach you, we supply you with nightly signals. And there was a signal that we emailed to our members. This was last night as an example. This was, as you see, issued on the 23rd, and as you can see, this was taken, I took the snapshot today on the 24th. These were all the signals to go short generated through the different strategies. Let's, in particular, take a look at this particular setup here. This was in MCO. We have a downtrend. Signals were generated to sell using strategy number 4 and number 8. All right. So if we look at the chart coming in, this was at the end of the day. Now, once again, we supply these signals so that you know what to look for. But once you fully understand the process, you'll be able to see these on your own. Okay, you'll be able to know exactly when a strategy is being generated, a signal is being validated or not. We're going to supply you with these little up and down arrows or indicators when a signal is generated. But remember, they're for educational purposes only, as well as the email alerts. So as you can see, this was yesterday's close coming in. You could have gotten short then if you wanted to be more aggressive or wait for the next day. And this is what happened when I took the snapshot the first couple of hours of today. Stock was already down 3 or 4 points from our sell point. Okay, so you could have gotten out using exit level number 1 with this particular strategy, or stayed in and sold a port, or should say covered a portion of your position and stayed in with the rest. So this is just in one day what has happened with one of our signals. As we always state, a year from today you will have wished you became a member of this course. So why wait any longer? You have to ask yourself, what are you waiting for? If you've been struggling this past year or so, if you thought that 2016 was going to turn out a lot better, and here we are already at the end of the 2nd month and you're not seeing the results you wanted to, you have to come on board, because we're really going to share with you and teach you 39 years of experience, someone who's been applying this to their own personal trading. So here's what we're offering all of our attendees today. The course, the 6-week live course, along with all the add-ons, all the techniques, all the strategies, usually goes for $49.95. Early bird, we're selling it for $44.95, okay? And this includes 1 year of trade signals, as well as lifetime correspondence and me as your personal mentor. So here's how to sign up and get involved in this stock course. Contact Pro Trader Strategies. That is their email address as well as their phone number. And as you see on the very bottom there, it's a rather long and lengthy link there, but that's the link that will take you to the sign up page. Now, that link at the bottom of this page is not live. If you'd like to go there with a live link, all you have to do is simply go to the right-hand corner of the Go to Webinar box, the column on the right under the chat category, and you'll see they have posted a live link there. Now, here's another thing we didn't talk about. We also have payment plans available. We realize that that may be a large sum for some people to put up for a, even with a discount, a 10% discount. That's okay. Pro Trader Strategies will work with you with some small deposits so you can have payment plans. So call them up or email them. That's the information right in front of you. So if you can't pay the lump sum, you can structure some type of payment plan and you'll still have instant access. Okay, so this is the beauty of working with Pro Trader Strategies. They will work with you and they will do everything possible so that you can become a member of the stock course. I'm going to leave all this information up if you want to contact Pro Trader Strategies or if you'd like to sign up immediately. That's the link at the bottom. Remember, it's not live, so go to the chat box on the far right. And remember, you can email or call Pro Trader Strategies with any payment plans you want to put together, any questions concerning payment plans. It doesn't mean you're not in any way restricted or guaranteed to do anything. You can simply call them and ask them questions, okay? So speaking of questions, let me open up the question and answer box and let me see what some of you have written. Let's see, John says, hi, Steve. I joined your webinar last Sunday with Dave Aquino. Oh, okay. Yes, this was another presentation I did where I talked about a separate package, which was mainly for beginning people. Let's see, he's having trouble accessing it. Can you please help me? Sure. That, once again, is Pro Trader Strategies. They deal with all of the products and all of the tech support. John, all you have to do is contact Pro Trader Strategies. They'll help you with that. You've already signed up and paid, so not to worry. We have a great tech support department. In fact, they will help you set up free of charge a lot of the programs, a lot of uploading of the PET-D as well as the strategy indicators. You'll be able to get the up and down arrows, and that's all done and included within the course, so don't worry about that, okay? Let's see, next question is, what are strategies 4 and 8? Well, we can't really go into them too much, but all I can tell you is that strategies 4 and 8 are our most consistent stocks for consistent strategies for trading stocks. Strategy number 4 is a pattern recognition strategy, okay? I can't give you that information. So we're looking for a specific pattern in a specific trend. Now, this pattern is not difficult to recognize. It's just a small calculation that you have to look for. And most people, once they understand it, they see them all over the place. They go, boy, I've never seen this before. This is so easy to spot now. And you can apply this to intraday trading or long-term trading. You'll see these signals and setups all over the place. So the strategy number 4 is based off of a pattern in a trend. Conversely, strategy number 8 is based off of an indicator. It's an indicator-based strategy where we look at a certain indicator, and once again, this is not something that you have to calculate or something you've never heard of. This is a standard tool, but we look for it edited and altered in a specific way. And then we apply a couple of other rules just to make sure all the requirements are met, and that gives us our setup, okay? So one is a pattern recognition strategy in the trend. Another one is a indicator-based strategy, all within the trend. Steve asks, sorry, I came in late. Does this work on Thinkorswim? Yes, it does, but the way it works on Thinkorswim, there's just a small alteration you have to do. Because of the way Thinkorswim is set up, we're not able to apply the PET-D on it. So what we have done is we furnish you with a free NinjaTrader platform. And we just use the data that Ameritrade supplies with Thinkorswim, and we just split it. We don't have to, shut down Thinkorswim. You can still be looking at charts there, but now we supply you with a free NinjaTrader platform that has the ability to use the PET-D as well as strategy 4 and 8 add-ons. You can see the up and down arrows, okay? And the beauty of this is our tech support does it all for you for free. It's all included. So there's nothing you have to purchase extra because you're a thinkorswim user. Okay. Many of our people that are thinkorswim users even like the NinjaTrader platform better, but it's okay. You can still be looking at both of them at the same time. Steve asks, does the PET-D put the green buy arrows on the chart? Well, first of all, Steve, the PET-D doesn't create any arrows. Arrows are only generated for our signals. But the good news is our signal add-ons do generate the up and down arrows. So you will be getting that add-on as a member of the course. So every time a signal is generated, you will be getting an indication either through an arrow or a dot or green or red dot that is a valid setup bar. But remember, those are for educational purposes only. I do not want to turn this into a system where you have no idea why you are going short or why you are buying. You're just entering because there's a green or red arrow there. That goes against our philosophy. They're there for you to check your work. In other words, if you think there is a buy setup there, well, if a buy arrow is generated, well, then you know you're learning the method, okay? As opposed to if you don't think there's one there, but one is generated, well, then you have to go back and research, say, why did I see that? What am I missing? All right. Now, conversely, the PET-D will not generate arrows because it's not a strategy. Remember, the PET-D stands for the early trend detector, the Primo early trend detector. So all it's doing is detecting the trend. Now, just the same way a moving average, if you use that for the trend, is not going to generate up and down arrows. A moving average is just there, it's just flowing. Well, this is not a moving average. The PET-D is not based off of a moving average. It's based off of momentum. That's about all we can tell you. But it will just turn the bars either green or red. That's all you have to look for, and then you know what side of the trade to be on. Okay, it's extremely simple. But once again, we go over all this in the course. In fact, we will be donating one of the sessions to the PET-D. Let me go to the next question. Steve asked, does it work on candles? Yes, it does. In fact, it absolutely doesn't matter what bar type you are using. Because remember, the candles are a specific type of bar that generates their own signals based off of the candle. These strategies are basing their signals off of either a pattern or an indicator. But they're not basing them off of what type of bar we're looking at. So it absolutely makes no difference. Therefore, since we're not relying on what the bar is, we can use any type of bar. Doesn't matter, okay? Let's see. Keith says, how about red or green colorblind traders? Oh, yes, we have found more and more. There are more and more colorblind traders. Can you change the colors? Yes, the colors can be changed, so not to worry about that. Even though the standard issue is red or green, you can be able to change the colors. Let's see. I didn't get anything out of this so-called webinar. Well, I'm sure, if you don't get anything out of it, that's fine. Remember, we are not here to just try and, have you, do something that you don't want. As I stated in the very opening of this, that this is not about telling you what to trade or how to trade. But you have to ask yourself honestly, if you've been struggling in your trading and you're not to where you want to be, then okay, you should be trying to learn something from someone who's been involved in the markets for 40 years. But the very fact that I'm in the market for 40 years means that I have something that is consistent, okay? Now look at your trading. If you're struggling, and most likely you are because you're at a webinar and you're looking for information, if you've been struggling, we have things that will be able to turn you around. So if you're having a difficult time, which is most likely most of you have been, well, that's the reason why you're here, well, then we offer you this. Just the same way, if you're hungry, what's the first thing you want to do? You want to get something to eat, right? The person isn't doing anything in disservice by offering you food. They're providing you with a service, and that's what we're doing. We're providing all the traders who are hungry for knowledge to make them consistent. That's our job at Specialist Trading, okay? Let's see, next question. Does it work with Metastock? Yes, it does. You can apply it. In fact, let me tell you the major platforms you can apply all of these to, okay? TradeStation, Metastock, MT4, NinjaTrader, Sierra Charts, FCXM, and remember, it can be applied with Thinkorswim, but you have to do that small process we talked about where you have to use the data from Ameritrade and then apply it to a NinjaTrader platform. But we take care of all of that for you, okay? And that's about it, okay? If you're having trouble, I realize this person who is having trouble with this, The beauty of this is that you came to a webinar and you didn't have to spend anything. So there's nothing to worry about, okay? It would be misleading, or it would be a disservice if you had to pay and then you didn't get anything out of it. But the beauty is we're offering you this information. We're trying to show you what's offered, and you can make a decision whether you want to do it or not. Through the testimonials you can see on the website, and you can Google us and see how pleased people are. We have people that are trading that are hedge fund managers, and we also have people that have been trading for the first time ever in their life. And do a Google search on myself or on Specialist Trading. You'll see the happy, satisfied traders we have. And then make that decision whether you want to continue trading the way you are and, be, unconfident about what you are, and feel that you have no idea what the market's doing and taking your cues from other people, or if you want to really take charge of your own trading. Trust me, I know you're probably struggling. That's why you're here, and you want to take charge of your own trading. We can offer you, we can help you, okay? All you have to do is call up Pro Trader Strategies. You'll be happy you did, and I think you'll be able to really, for the first time, be a consistent trader, okay? In conclusion, remember, if that's too much of a lump sum to come up with, don't worry. Pro Trader Strategies will provide you with for a short time, some type of a payment plan. So you can contact them directly, and they will structure it for you to meet your needs so that you can be up and running ASAP, okay? So if you have the Thinkorswim, don't worry. It can be applied to Thinkorswim platform, okay? But let's see, if you have the Pet D already, some people are calling in saying, Steve, I already have the Pet D. That's fine. They will work with you in some capacity so that you can still be a part of the course and not have to pay for the Pet D over again, okay? So in conclusion, I want to say thank you so much. Remember, if you're struggling, like some people are, that I believe Money Beat Trader is struggling in their trading, there's no need to fight or to be frightened. If you want to continue being inconsistent, that's fine. No one's telling you you have to change. But if you really want to be consistent and you want to be a consistent trader, we have the information and the knowledge that has stood the test of time. Plus, you have someone that has nearly 40 years of consistent trading to be your mentor, okay? I want to say thank you so much to everyone joining today. I want to say thank you for attending. I look forward to all of you becoming members of our course. And most of all, I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much, and I will see you next time, and I will see you in class. Bye-bye.